What's up guys, and welcome back to another crypto video. Today's topic will be spread trading on a Bybit. Also amazing rewards are waiting for you if you participate, so guys, stay tuned. Hello traders, and welcome back to another crypto video. Today's topic, we are diving deep into the powerful but completely underrated thing called spread trading, and it's operating on a Bybit. So if you are right now into low risk strategies and just want to edge in volatile markets, you are going to want to watch this video. So let's break it down in a simple 5-minute format so you can understand how it works and where you can also participate. So first you need to know what spread trading is and where you can find it. So here guys, you can see trade, and by scrolling down you can see spread trading. So seamless profit from spreads with atomic executions. So in short, spread trading it's a way to profit from the price difference between two related instruments like futures contracts with different expirations. So you're not betting on whether Bitcoin goes up or go down, you're betting on the price gap between, say, let's say Bitcoin USDT perpetual contract and BTC USDT quarterly contract. That's how simple it actually is, and it's also explained here very well. So it's going from BTC, Sol and Ethereum. You can choose between perpetual against spot, and here you can see perpetual against contract that is ending in 13 June, 20 June, 27 June, and also 25th July. Everything is explained here to understand simple. You can see you're opening two positions at the same time. How it works, let's find out. So important, as I mentioned, you are not betting where the prices go. Will it go up or down? You're betting between the spread and the difference between two different contracts. So let's make a quick example of what it actually is. So first guys, you need to know that, let's say Bitcoin is right now operating at $65,000 against USDT in the perpetual trading. At the same time, BTC USDT quarterly contract is at, let's say, $65,300, so that's 300 premium. You enter spread trade by shorting the quarterly contract and longing the perpetual. So now if the spread narrows, say the quarterly drops to $600 and $100, while the perpetuals stays around $600,000, so that $100 is shorter, which means that the spread is lower. You made money on the short side while the long side stayed flat or loses much less. Your profits is in the converge, which means that this is often called calendar spread or inter-delivery spread trading. So why I want to use it, it's important to know. So because it's much lower risk and is less sensitive to market directions. Your hedged one leg protects the other ones, which means that it's also great during the periods of high volatility or when funding rates get extremely on a Bybit. So you can monitor funding rates and basis between contracts to identify spread trading opportunities. On a Bybit, it's very simple to start your own trading. First, you need to create your account, you need to verify it, which means do the KYC, and once you create an account, you need to deposit some money and you can go directly to the trade and start this. You need to know that you're opening two different trades on the same time. One is long and one is short for each different positions. That's how simple it is. You can manage your position as the spread changes, and you can always monitor margin usage. So if you're using the API or third-party tools, you can even automate this, but that's the whole another video. So quick warning before we continue to something much better. Spread trades aren't risk-free, liquidity can vary. Also, spreads can widen against you before it converges, and also always set stop losses and size your position properly. But in practice, this can be a very powerful strategy, guys, especially for traders who want more consistency or less exposure to the sudden dumps or pumps. Also, guys, there is one more thing that I would like to show you, and it's right here. This is Spread Trading Splash, and you are able to grab 20,000 USDT. How? It's operating from May 20 to June 20. That's when it's going to be ended. You need to hit trading milestones and score up to $2,000 in a single draw. And it's really cool stuff. So you can win Bybit Spread Trading. Stand to win these rewards from $100, 25 USDTs, 1 USDT and 0.5 USDTs bonus. Remaining tickets, you can check it right here how to participate. Here you can see the more you trade, the greater your chance of scoring a win grant. So for everyone, you have a chance to grab one ticket. So you need to have trading volume of more than $100, and it's going down to $100,000, and you got 2 chances in a lucky draw. And by scrolling down, you can see terms and conditions. Everything is very simple, guys. So you must register for the event via the register now button to be liable for the rewards. This event is not open for users that where it's not possible to do. Rewards will be automatically distributed to liable users reward hub within the 7 days after the event ends. So users must manually claim the rewards from the rewards hub. It's simple. Find it in the right here, so it's rewards hubs. Users must complete at least standard identity verification to claim the rewards. Only trading volume generated through spread trading after registration for the event will be counted toward reward reliability. So everything that you traded before won't be recorded for that. So you need to first apply for the splash, and after that you'll be able to every volume will be counted. So Bybit reserves the right to modify the terms of this event without notifying users in advance. You need to know that. And also right to the final interpretation of this event. If you have any questions, please contact the customer support. So this is great stuff, guys. Great opportunities there. Don't forget, I'm not your financial advisor. Nothing here is financial advice. Everything that I'm doing is for your education and for your entertainment. Always do your own research before any investment of yours. You need to explore the market. You need to find more videos about the spread trading, understand it better, and after that you can start participating. It's less aggressive, guys. You can one leg is depending the another, and you have a chance to make better and easier choices in the trading. You don't need to determine where will the price will go up or down, just if the price will be between two different derivatives from the same contract, from the BTC or Ethereum or Sol. It depends on which one you choose to be shorter or longer. That's how it is, guys. It's very simple, but please do your own research. In the comment section below, please tell me what you think about this. Don't forget to like, share and subscribe, and see you in the next video.